Today's topic is the election of Donald Trump as President of the United States and the housing market.
We will make housing much more affordable. As inflation is tamed, interest rates will dramatically fall. They'll be down very, very low. We'll get them down to 2.4% and even lower than that for a period of time, reducing.
How him and his administration are going to affect it, and obviously his policies, what effect they're going to do on everyday Americans who want to buy a home, who want to buy an apartment, who want to maybe invest in real estate. So that is the topic for today, and I'm going to connect several things. Robert Niyazov here, your trusted mortgage source, and let's begin. I'm going to start with the most recent thing this is a very fresh news, and it immediately had an effect that everybody expected. The stock market went up. Stock market went up really disproportionately, and even though it was kind of expected, obviously many people are happy about this fact that their bank accounts grew. But at the same time, the mortgage rates, the long-term rates, also the immediate effect was also they edged higher. So why is that? Why is all of this? So first of all, obviously, we in this case we do have one thing. Donald Trump was already president for 4 years between 2016 and 2020. Or I should say 2017 to early 2021. And, we obviously remember what his administration means, what his vision is. Normally, his policies mean more economic growth. With that economic growth, obviously, companies, develop, they invest, etc., etc. But also with the good economic news comes higher, longer-term rates. So that is all logical. Now, those are two competing facts. On one end, we have a stock market, so people have more money, they can invest in real estate. On the other hand, the rates are higher. So, which one wins? And it's really not a question about what wins. The question is, your long-term plans and the models. And my model, I'm going to talk about this in a bit. I will tell you why I think people will continue buying homes and with what in mind. But let's first talk a little bit about the history. We know that in 2000, for example, 2017, 2018, during his presidency, we had more or less stable and healthier housing market. And I'll tell you what I mean. A normal house should get a few offers, let's say between 3 and 5, or between 2 and 4. The number is right there before the owner should make a decision. If they get less than that, then the market is very weak. It's not healthy. If it's more than 5 or 6, then again, it's the other way around. It's just too much demand, maybe no supply, and prices are pushed up. At the end of the last decade, again, during Trump's presidency, we had a normal market. We had people, on average, making 3 to 5 offers on a home. If you go back to 2010, 2008, when we had a financial crisis, there were homes that never got any offers. They were just taken off the market, and maybe later the homeowners decided what to do with them. So there was no interest. So that is really bad. But now let's talk about 21, 22, or rather 2020 and then 2021. During the pandemic, there were situations where there were 20, 25 offers on a single property. And that's also really bad. So I expect a more healthier market, where people can go and choose and they will have choices. Obviously, there is still shortage of homes in the United States, and that's going to be a big factor. And again, I promised to connect the two. In my model, when the stock market goes up, people have more money. What many of them do, and I would say, those who actually think progressively, what they do usually do, they take the money from the stock market, at least a portion, and they invest in real estate. You need to put a small down payment. Sometimes you need to put a bigger down payment, depends on what property you're buying. And with improving stock market and improving economy, there is definitely demand. There is demand from investors because they want to invest. You see, diversified investor doesn't just invest in one thing. They would invest in stock market, they would invest maybe in alternative investments such as gold, etc., and they would invest in real estate. And if they see that, let's just take an average investor with average net worth of $1 million, and let's say $700,000 of it is in the stock market, and the stock market grew and now his value is 1.5. Well, that person can take some money out and maybe buy a few homes. Granted, that will put more pressure on housing supply, but because of the security of a real estate, a lot of people are interested in this. So let's summarize, I guess, this portion, and then we'll talk about something else. I think in a near term, the improved economy, and policies of the new administration will lead more people to buy homes. Whether it's a first-time home buyer or a repeat investor, we will definitely see interest in real estate. Regarding the rates, I do think that they might be here, where they are now. Let's just say around 7%, 6.5% to 7%. My prediction stays. I think for the next year to year and a half, rates will hover anywhere between 5.5% to 7.5%. In my prior video, that's exactly what I said, and so far, it is exactly what's happening in the market. I don't anticipate they're going up disproportionately in double digits. I also don't think they will go to 2%. If we will see some stagnation in the housing market, we might see rates deteriorating, improving, I guess, the rates reducing to somewhere with a 4 or maybe a 5 handle. So as I said before, the administration, the Trump's administration, will probably spur interest and continued interest in the in people buying homes and getting a mortgage. And even if they're not getting a mortgage, if they feel that the rates are high, they may buy a house, outright, and when the rates improve, maybe they'll cash out then. I also think that those who really want to buy shouldn't wait for kind of better days, and I'll tell you why. You probably heard every year since 2000, maybe 11 or 12, there are people out there on the internet, they're saying, next year we'll have a housing crash. Next year we'll have a housing crash. Every year there's a housing crash, yet prices only increased. Not that we didn't have the crash, we didn't even have a slowdown in price appreciation. There was different degree to which prices increased. Sometimes it was only 2%, 3%, and even if they dipped 1% in at some period of time, that is not a crash or anything, nothing near it. So the explanation is this: the entire world is interested in investing in the United States. Why do businessmen from China invest here? There's 90 million unoccupied vacant units in China. Why do they buy here? Why do businessmen from Brazil, Argentina, Japan, and other countries buy in the United States? By the way, that's only adding to the pressure, and it will continue. They like the system, the democratic system in America, that we have laws, that the laws can be enforced. So there's a continued interest in in the in holding an asset in the United States. So putting it all together, we might see some temporary deviation from what I said. There might be a period maybe of 3 to 4 months where maybe we'll have very stagnant demand. It will be maybe a little bit weaker in some places in the United States, but generally I think the direction is upward. I'd like to know your opinion. I'd like you to comment on this as well. What do you think? If you like this video, please like it and subscribe to our channel. We will be back with new and interesting material very soon. Thank you.